thank you all for joining us here today for this very exclusive lunch. And I hope we have an engaging conversation on a very, very interesting topic. This is my first time in Bangkok. I am based in India. I come here from South Asia. And probably your organization, the IMF, is one of the busiest organizations in South Asia right now. Okay. So I want to jump in straight with what's happening in the world. It's an exciting time to be alive if you're looking at it from one perspective, from the economic perspective. The IMF, of course, has warned that the US and China will both be slowing down. What does that mean for Asia, Eteri?
Thank you very much. First of all, hello everybody, and I'm delighted to be here. I actually arrived to Bangkok this week, and I will be taking position based in Bangkok. And it's an excellent opportunity to have a conversation with you all who make business decisions and important business decisions in this country, but region at large as well. Thank you very much for your question. Indeed, the world is facing many difficult headwinds, and we are in a region which is a central engine for global growth. Engine of this growth is, of course, impacted with developments in China. Maybe I'll start with China. So we are projecting that China's growth will be slowing down from 8.1% in 2022 to about 3% in 2022. And we expect that China's growth will remain around 5% for the next 5 years. Of course, this development will have significant implications globally, but also in the region. This region became more connected in terms of trade in the past decade. And in fact, intra-regional trade is now contributing about 50% of total Asian trade. So, and at the center of these trade linkages is, of course, China. And whatever happens in China is transmitted through those trade links to the other countries. So what it means, first, slowdown in consumption will impact demand for imported inputs, which will have implications for supply chains. And in this regard, recent lockdowns in large cities and special economic zones in China strained factory production as well as supply chains. And if these lockdowns continue any longer or become more widespread, of course, impact will be felt throughout the region. So China is facing trade-off in terms of its health as well as growth objectives, and how those trade-offs play out will have implications for trade channels and trade transmission in the region. Second is, of course, distress in real estate sector in China, and if that sector is impacted, it means that there is lower demand for commodity-heavy imports from commodity exporters, and it means that growth in commodity exporters will be impacted as well. So those are kind of main transmission channels that will affect regional developments and especially Asia. On the upside, of course, if those lockdowns and also real estate sector shows that growth is slowing down way beyond growth targets which are announced, it is expected that it may trigger policy action for decision makers, and policy support could mitigate some of those pressures. So, of course, we are monitoring developments very closely, and it's highly uncertain environment that we are living in.
Eteri, one area that you are definitely having to monitor very, very closely and even step in to help is South Asia, of course. Bangladesh has reached out for preemptive help to the IMF. Sri Lanka is trying to negotiate a bailout with the IMF. It's still some distance away from securing help there. Before I get into specifics, could you let us know if you're seeing pockets of stress, credit stress especially, building up around the world?
Yes, of course. I mean, we are living in a situation when U.S. tightening action is becoming more pronounced, and it has implications for global financial conditions. We have tightening of global financial conditions, higher borrowing costs, and of course, increase in capital outflows from Asia. Of course, it creates difficult challenges throughout Asia. Over time, we'll see that higher borrowing costs now will translate into higher debt service requirements in the future, which will have implications for fiscal spaces in many countries, which means that higher share of public spending will go for debt service, and there will be lower space available for social and development spending. It will also have implications for the private sector, because indebtedness in Asia has increased significantly in past 2 decades. In fact, if debt levels were contributing around 25% in the past, now they have increased to 38%. And Asia is the largest contributor now to the overall global debt. We also did research for indebted firms, and we see that tightening global financial conditions and tightening action by U.S. will have a direct implication for investment by highly indebted firms, and they will be negatively and significantly impacted. So that side of private sector story will become more difficult as well. You asked me specifically about Sri Lanka and Bangladesh, and before I respond about those, I should say that compared to, for example, 2013 taper tantrum, many Asian countries are much better positioned to withstand those tightening conditions, because we have higher reserves and we have stronger current account balances, and institutional strength is also there. So the short-term volatilities and short-term pressures will be relatively easier to handle than longer-term implications of higher borrowing costs. And some of the countries like Sri Lanka, who have high dominated foreign exchange debt and face high rollover requirements in the near term, of course, will be impacted negatively and quite considerably. I should correct you a little bit about where we stand in regard to Sri Lanka. Actually, we have reached a staff-level agreement with Sri Lanka in September, and we agreed 48-month program for 2.9 billion. And the program is available for disbursement once board approves a decision about this. And as you well know, Sri Lanka is facing severe economic crisis, and livelihoods of people in Sri Lanka, especially most vulnerable, are severely affected. So question remains, what is the path forward? And here, of course, decisions of creditors is very important, and it's very important that they give financial assurances to move the process forward for us as well. And important structural reforms that Sri Lanka will be focusing on to come out of this situation is, of course, strengthening its revenue potential, which is one of the lowest in the world. And they already have building blocks for that. For example, a few years back, they approved direct income taxation, which is a modern legislation and important centerpiece for improving revenue generation in Sri Lanka. Second will be, of course, strengthening monetary management mechanism and making it more data-driven. Third is making energy pricing to a cost recovery. And of course, protecting the most vulnerable and making sure that there are sufficient mechanisms and social support systems to be able to help the poor. And finally, strengthening overall governance and transparency will remain important.
Eteri, I want to specifically ask you about our topic today, ensuring a just recovery. How can Sri Lanka, which is going through a debt crisis, it has to tell its creditors, which are many bankers who want their money back, that we are going to give you your money back, but at the same time also protect the poorest people in the country. How do Asian countries manage this balance, especially how does Sri Lanka manage this balance?
It's a very difficult question, and it's a reality of situations that challenges are very difficult with a sustainable debt situation. I think where we come in and where we could help is, of course, financing. That's one thing. And second, hopefully this financing in combination with important reform commitments and implementation of commitments will catalyze additional financing from private sector or development partners, which will help Sri Lanka to cope with this situation. And as you rightly said, it's very important that fiscal spending and revenues which are being mobilized in Sri Lanka itself is being channeled to help the most vulnerable, and selection of projects or programs that country is implementing is growth and social friendly. In regard to relations to creditors, I mean, it remains between Sri Lanka and its creditors to make an agreement. I think where we come in is helping to support this process through program commitments and the program framework. And we take suffering of Sri Lankan people, of course, to our heart. You asked me about Bangladesh, so maybe I could say a few words about this country, as I have been living there for many years. In fact, Bangladesh situation is very different from Sri Lanka. It does not face debt distress, especially and specifically Bangladesh debt is sustainable, and it will be growing way above average for Asian regions. So growth performance in Bangladesh will remain quite strong. I think where Bangladesh comes for support to the fund is to make its macroeconomic framework and macroeconomic situation more resilient, and as resilient as people of Bangladesh, I suppose. And second pillar of our support is climate resilience support. And as you will know, climate mitigation and adaptation requires import-heavy investments as well as domestic revenue generation capacity. And that's where our programmatic support is coming into Bangladesh, helping them to build institutional systems as well as macro framework to be able to achieve their climate goals. So in that sense, watching implementation of that program, which is expected to catalyze additional financing for climate issues, will be very interesting for the region at large.
Eteri, there's a lot of interesting work happening on the finance, on the climate space. A lot of interesting work in Thailand when I speak to people. But one input that feeds into all these discussions that our room is very interested in is, of course, the US monetary tightening. Because if the tightening happens too fast, it throws all plans off kilter. So where do you think are we positioned? Is the global monetary cycle tightening position? Are we closer to the peak? Are we not so, do we still have some distance to go? Where are we positioned?
Yes, I think we already talked about the US tightening and its implications for financial flows. I think in terms of tightening decisions in Asian region, what will be important is to watch inflation. And we have seen that the inflation levels in Asia in 2021 were much lower than elsewhere. But this year we see pickup in inflation, and of course external factors like Russia's war in Ukraine, which has negative implications for commodity prices globally, affects inflation trends in Asia as well. But now we saw that those transitory impacts have translated into higher levels of core inflation, which are above targets of inflation targeters in those countries. So we see that many central banks are taking tightening decisions. I think those tightening decisions will continue, and we will see a number of Asian central banks responding to inflationary pressures by undertaking further tightening actions. Of course, calibration of those actions will depend on country-specific circumstances, especially, for example, exchange pass-through to inflation, where they stand in terms of core inflation, what is the impact of commodity prices, and how all those indicators are playing out. So that's something that will be evolving this year and next, and more tightening actions are expected.
Eteri, I've just been warned very discreetly that we're running out of time for our session. But I want to ask you a very, very important question. You spoke about the war in Europe. Arguably, the pandemic is still affecting us. There is a lot of long-term impacts of both of these conditions. Inflation, while it might be easing, the impact of inflation is not going to go away overnight. Arguably, there's scarring happening in the global economy. Is that affecting long-term economic potential? And how should businesses and policymakers prepare for that scarring?
That's a very good question. So maybe I could tell a little bit about our projections for Asia at large. We're projecting that Asia gonna grow around 4% next year. Asia will remain engine of growth, and it's a bright spot globally, because we're projecting global growth around 2.3%. That said, compared to past performance, of course, it's lower than 5.5% of average growth that you are used to see for Asia. That said, I mean, we also see that pandemic, as well as Russia's war in Ukraine, have hit Asian region and Asian countries in very significant way. And our estimates and research shows that many countries, especially advanced economies and especially emerging markets in Asia, will be facing a situation where their growth levels in long term will be lower than pre-pandemic. And our estimate shows that it will be around 9% that emerging markets and developing economies will be foregoing growth because of pandemic scarring. And this is deeper than, for example, 5% average globally. I think this is also, to some degree, a challenge, but also an opportunity for many Asian economies and businesses to take a hard look at what is needed. And I think what's clear, what's needed, is investment in human capital, and investment is growth and social-friendly development programs, because social scarring has been an important part of pandemic scarring. So investing in human capital, developing those aspects, investing in climate resilience, developing those aspects will be an important driver of post-pandemic growth and recovery. And we also see that across the region, digitalization and adoption of new technologies are contributing very positively to those developments and modernizations, and that's an opportunity to use as well. Thank you.
Eteri, investing in human capital, probably the easiest way to ensure a just recovery.
Yes.
Thank you very much for joining us.
And we are happy to be part of that.
Thank you.
Thank you. Thank you. Thank you. Thank you. Thank you so much.